I'm Harry Boxer, the technical trader. The Tech Trader has been around since 2001 and is considered one of the first sites ever, trading rooms on the internet. I've been doing this for a lot of years, over 50. I wrote a book called Profitable Day in Swing Trading, and I speak at all the traders expos and money shows nationwide. But more importantly, I have a trading room. The trading room consists of, along with myself, individuals that constantly sharing their ideas, their comments, and their questions. And that's something you can do as well. If you come into the techtrader.com for 2 weeks for free, no credit card, you'll see what we do every day. We're day traders, we're swing traders. I'm a technical analyst. I've been doing it for, as I said, for over 50 years and strictly believe in technical timing. But also, I look at fundamentals because I want to know why a stock may be triggering a move that day. But for the most part, in the interim, during the session, I'll be strictly looking at technical trading and chart patterns. All right, so let's get back to sharing my chart. We have a question here on the Petrobras, the oil company. Now, folks, as you know, with what's going on in Iran and with saber rattling, I call it, it appears that oil stocks, well, some of them had big days. We had a couple of day trades today that you wouldn't even believe. We start off the day with taking a look at HUSA, which this morning exploded. We saw that little flag and we bought it on the breakout right there at about 14 and a half. Literally in a half an hour, the stock was 22. Then it coiled and popped and went to 25. And this is the kind of stock that we trade every day at the techtrader.com. When we see something that's popping, INDO, same thing, pop, little pennant, breakout. When it was 4 3/4, we bought it for a move to 6 1/4. And the big one was Robin this morning, is it exploded out of a coil pattern. It popped and pulled back. When it broke here is where we put a day trade on it around 8. And literally 45 minutes or half an hour later, it was 14.49. And then the rest of the day, they didn't do that much. But just to give you an idea, I trade 1 minute intraday chart patterns on day trades. And I trade 15-minute to hourly and daily patterns when I look at my swings. Usually, a stock that's a swing comes from a day trade because the day trade, it creates the breakout usually and maybe a new trend in the stock. But for now, let's go and talk about your questions. PBR is Petrobras. Now, here's the stock that's the largest, I think, Brazilian oil company. And you can see for many years, the stock went from about $3 or $4 into the high teens. It's a heavily capped stock. I don't see this as being attractive to me because of this. We're still in a 1.5 year long downtrend. And yes, it broke out. But look at all this overhead resistance. If you want a target, I'll give you one. Basically, about 14.5, 15 is going to be a wall across here. So why trade something that has that much resistance overhead when you can be trading something else? But that's my take on it. I'm going to go back and answer some questions from some of the people that didn't get their questions answered. Okay, we'll start with Newmont Mining, a big gold stock. That's from Body Vibe. You can see the Newmont, and I disliked gold for a long time in here. And even here, until it broke out here, Newmont Mining is one of the premier gold stocks in the world, along with several others that like Franco-Nevada and Royal Gold. Those are the top 3, I think. But because I know the gold group. This is a base breakout, a retest, a wedge, a breakout, retest again. Look how it's holding moving average and it's pop. Look at the triple top in here. If Newmont Mining breaks across 59 with any kind of real volume, we're probably going to see, I would think, mid-60s to 67, longer term 73, 74. That's my target for Newmont Mining. Now, there was two stocks that I follow very closely. NNE in the nuclear energy group and SMR. I like OKLO too, but I'll talk about these two because the questions on these two. Here's the long-term charts. NNE was leading in here, but now it's a laggard. I'll show you why. Look at SMR compared to it. SMR is by far the better chart. It's in a rising channel. It's broken through a triple top. It retested. It ran up. And right now, my target's 60. The only problem is it's so extended from the April low from 11, okay, to 45. This is 300% in 2.5 months. Anytime you see that, you're vulnerable to sell-off, particularly if the market has any kind of hit back here. So what I would do, my take is stop under 37. The targets are 52 and 58.60 in that range. Maybe as high as 75, depending on how this group goes. Just want to throw in OKLO because I love this chart. It's very similar to SMR. Both of these are my two favorites. This one has been a great swing trade for our group. I gave it to him here, and I gave it to him here. All right, we're going to move on to some more questions. And I like SMR better than NNE right now. If we have any more questions, please post them. Matt Sam said, Harry, talk deep. I'm not sure what you're saying here. Do I think gold is over compared to oil? That's a great question. Well, here's the GLD, which it tracks the price. So it's an ETF, the gold. And gold, to me, looks way better than oil. And here's why. I think oil is only up, excuse me. Look at USO. Oil is up because of what's going on in Iran. But we're at a quadruple top. If any kind of news comes out of a positive nature in terms of some kind of deal or settlement, this will come down hard. And yes, you can speculate that this could go 86, 88, 91 quickly, but it's so extended and overbought on heavy volume. I'd be really skeptical. Does it have momentum? Yes. Has it broken resistance? No. That's the thing to watch carefully. Okay. Right now, when you're looking at trends, GLD is way better. And so is NUGT, which I follow. This is a ETF, double ETF for gold miners. And I liked GDX. I like silver a lot now, better than gold. Look at AGQ. I think that's breaking out multi-year highs. And I like SLV. But there's some junior golds, silvers that I really like a lot. Keep an eye on the big boy in that group, wheat and precious metals. That looks like a $120 stock to me, trading at 91. And Pan American Silver, breaking it out and flagging in here. This looks like it could be, high 30s, $40. So those are the stocks I like in the silver and gold groups. Barry wants to know about CRVW. Well, this was one of my biggest picks of the year. I want to show you something. CRWV. Yep. I'll get it. All right, now take a look at this chart. So when it went public, and I knew a lot about the company, and it came down in a coil, I said to myself, the second the stock breaks out of this falling wedge, that coil, well, it broke out and popped and flagged for a week, and then broke out, and that's where I gave it to everybody. It was at 44. Quadrupled in just 6 weeks to 166. I thought it was going to top there. Guess what? It formed a flag and it's going even higher. It broke out today. New all-time high at 175. My mid-range target is 205. My upper channel target is 275. And I kid you not. So how's that for an answer, Barry? Seamus wants to know about JP Morgan. Let's look quickly. Okay, well, JP Morgan is a leading financial group. If you look at Goldman Sachs as well, they all look the same. Downtrends and uptrends. They had a three-wave corrective big downtrend, V bottom in April, broke out when it got right through that level and platformed. Now it's moving higher. Look, provided the market doesn't have any kind of big hit, this is a $300 to $315 stock, in my opinion. But I would also put a stop here, no question, under 255.6. That would probably break the lateral price support. I know it'll break the trend line and maybe even the moving average. So that's my take on JP Morgan, Seamus. Also, a question here on, one sec. HCI, take a quick look. This is for Fred 7. HCI insurance. Don't put me to sleep, Fred. It's in a nice uptrend. I'll give you that. Let's look at the long term. It's at new all-time highs. So what could be bad? It's had a 1, 2, 3, 4, 5-wave move. That could be bad. In Elliott wave terms, it's extended and it's at the nearing or it's in the fifth wave. Fifth waves can extend, but I'll tell you this. If it runs into the 220, 240, 50 range up there, which you would love, I'm sure, then I'd say that's a long-term target. But for now, you got to get across 176. The near-term target is 195. I like it, but I would also stop it under 140, 41. Okay? PRIM. Also for Fred. This is a good chart. Engineering construction. Oh, yeah, I know this company. A nice Elliott wave declining channel. There's your breakout. Folks, when a stock breaks the declining channel, goes through lateral resistance, and moves to the moving averages, it's a buy right there. That was at 62. Within a week and a half, it was 78. That's how you do technical timing. Right now, it's pulled back and formed some sort of wedge. It's got to run up and take out 78. It does that, you could see mid-80s, mid-90s or more. I would definitely put a stop under 68. Let's move on. Camille, I mentioned silver. I hope that my take on it was fine, but I like it. I'm not going to talk about the U.S. dollar. I don't trade it. I don't know much about it. So George Fee wants to know about URNM. Is that a uranium stock? So Sprott Uranium. Oh, it's an ETF. I've never heard of this one. Well, look, I like the group. I like CCJ. And I've been talking about CCJ since it broke out at 48. It's now 69. You want about you? I'm going to give you specifics on URNM. Beautiful uptrend, rising channel bottom, parallel 45-degree angle. Can't ask for more. That's exactly what you want in an uptrend. When a stock is moving like that, on that angle, and doing it, not getting too far ahead of itself. What I would look for now is a move to 53 to test this zone where you can see resistances. Obviously, very strong action. Obviously, the pullback lows at 41 3/4 would be a stopping point for me under that. I like the look. It's a good one. Matt, are you asking me about WOW? You said WOW. Does that mean you want the symbol WOW? Yeah, it's an ugly chart. I wouldn't touch it. Oh boy, here we go. CRCL. I told my people I don't want to even touch the stock. But it did go bazookas. Take a look at this. Now, here's what I would talk about. Anytime a stock goes from 103 to 166 in a day and a half, you got to be careful. Better than that. This stock exploded from the IPO and formed a beautiful coil. And when it broke across there, I told all my people this could be an interesting play. 128 to 166. This is a 1, 2, 3, 4-wave move in Elliott wave terms. I would look for that as your angle of ascent. I'm taking that out because I think it's an outlier. If you want to know where this could go, $200, maybe 210. I would keep a tight stop under 140, 44 in that area. I don't want to see it below that. If it breaks this flag to the downside, it won't be good. This is a bull flag in hourly terms. On a daily term, you can't see it as well. That's why I drill down sometimes and go to even a 15-minute chart. Take a look. 1, 2, 3, 4. If it breaks here, you got a good shot at, 195, 200. What is my typical stop loss? Well, Matt, I don't believe in percent stop losses. I have talked to some major traders that I know over the years that use 8 and 10% losses. Why not put your stop underneath where the trend is broken, where the moving averages are broken, where lateral price support is broken? Like in the case of CRCL, why wouldn't you stop it under there? Or stop half there and half there. What's that? That's the trend line. Well, what is it also? It's also lateral price support in that zone. So the bottom line is you have a stop where support is broken in a trend line, in a trend channel. Like even today, I'm going to show you this again. Intraday. Where would I put a stop on this? Well, here's the volume weighted average price. There's also a pullback. Obviously, this break right here is where you stop it. There's a double bottom error and there's price support there. So you price it underneath where support is broken. It already broke the trend line. Now we broke lateral price support and the volume weighted average price. So even though it popped up and went sideways, you have to protect yourself. Herbalife. I used to work in the Herbalife building in LA. All right. I know the company very well. I used to know the CEO and CFO. Looking at the daily chart of Herbalife. This is one ugly downtrend, isn't it? Here's a stock that went from, say, call it 60 to 5. What do we see here? I almost put a swing on this for my people. I said, when it came off the low and big volume and formed that little flag, I said, if it breaks out again, we go long. It did not. Now it's got an inverse head and shoulders. Left shoulder, head, right shoulder. There's a declining top sign, but right there. If this gets through that zone, it gets above 9, 18, 20, 23 in that area, I would look for a swing to $12, maybe 13. 12 and a half is a good number. So that's why I like this stock, but I would also be careful on anything that drops underneath 720. Okay. Why no candles? That's a good question. Matt, I have never used candles in my life. I've done this for over 50 years. I'm an expert bar chart guy. And you know the old expression, if it ain't broke, don't fix it. Well, I've tried candlesticks. I've looked at them for years. I just don't feel they're a help to me. What I do and the patterns that I see, because I'm a pattern recognition guy, is way better than any candle. And I've done years of research on it. So for me, the best charts to trade with are bar charts, 1 5-minute short term, 15-minute to an hour, and daily on longer term. Simple as that. That's why. I'm looking at AMF and thinking it's primed for a big drop. Okay, IMF. Well, the problem is that there's just too short a time frame on a chart. I can tell you this, similar to what I saw today, I want to show you something. This thing dropped hard and formed what I call a bear wedge or bear flag. Let's call it a bear coil, bear coil. See it? And it broke down. Yes, this stock could be in the low 40s. I want to show you an example of the same thing today from First Solar. And that's one short I put out today for my people on a 1-minute chart. Check it out. Pre-market. Let's go back in time. You can see it. That was the pattern pre-market. It had gotten crushed. It dropped all the way down and then formed this bear flag. And I told my people at 147, 148, to even pre-market, the day traded short. This stock dropped from here to 131, 13 more points. I'll show it to you. And right down to there. 131.70 was low. And it did get back up to 144. But the point being, and to answer your question, IMF has got too short a time frame for me to say I can give you a critical, accurate analysis. But I will say that anytime a stock drops quickly from 51 down to 42.3 and then forms that flag, it is bearish. Is it the one I want to short? No, I got too many better shorts. I publish a list of box of shorts that are outstanding. Even in the best bull markets, we have stock dropping, of course. If you want to do it, yeah, I favor that. And especially if it drops down underneath 43, you might start to see 40, 40 and a half, something like that. That would be my target. Well, SP, your question about TC2000 being a platform for scanning purposes. Believe it or not, I'm old school. I don't scan a certain way. I look for certain patterns. So by looking at those patterns, I'll take the time to scan through hundreds and thousands of charts. And I don't care if it takes me a couple, 3 hours, but I'll come up with charts that I like the best based on my eyes, not based on a scan. Now, that may be old school, and so be it. But that's the way I do it. Why balance of power and volume? Very important. A stock that goes up with no volume and one sec. Okay. You see, a volume confirms price. Without volume, and I've seen too many stocks go up on low volume and then not be this kind of a winner. So price precedes volume, but price also has to be with volume for the stock to matter. Volume has to be with price or it won't matter. You see high volume zones, the stock goes nowhere. That just means some institutional or insider accumulation of blocks of stock. That's what that means. And it's usually a precursor to another run-up. Okay. IWF instead of IMF, big difference. Okay. Be careful. Now, it doesn't mean you're looking at Russell 1000. That's interesting. I look at IWM, which is 3,000. Russell is it 2,000? Sorry. Are they rolling over? Not yet. And here's the thing: when you stand in front of a runaway freight train, you can get run over. If a stock's going to go lower, it's about what it looks like to me, a parallel channel. Is it at the bottom of the channel? Yeah. If it drops under, I would say 400, 401, you could probably test the 385, 88 range right in here. So if you're going to go short or buy a put option or something like that on it, you better be quick and nimble. But there's also a rising 50-day moving average, which is bullish. That comes in around 380. So somewhere in the 385 and 380 is your targets. That's if it cracks here. This could turn right around and go right up. No reason to anticipate. Let me tell you that the biggest losses I've ever seen people take, and myself as well, years and years ago, is when I anticipated, oh, this looks like it's going to break out, and it didn't. I tell everybody in my trading room every day, here's the pattern. This looks great. It's a great setup. Do not buy it until it breaks out over resistance plus volume. I don't care if a stock breaks out and there's not enough volume. That's not a buy for me. It's got to be a price volume surge, a combination of price and volume, a phrase I coined many years ago. The price volume surge is the key to any movement in the stock and or a trend change or a trigger. In the case of this one, it's too bullish to short, period. If you're anticipating the market's going lower, yeah, this might come down. But it pays to wait and look for, and I would rather short it at below 400 at 398 or 399 and know that it's going down to 381 or even lower. Or you can always short a bit of it here. Like for example, you want to short 500 shares or you want to buy puts. That's right. Buy half the puts you wanted to buy, and if it breaks down and underneath the 400 area, right now this is a minor support right through here. See it? So if it breaks that line, it breaks the trend line, it breaks the volume weighted average price, it breaks the moving averages. So then you can be assured it's going to break down. But right now you're thinking about it, you're testing it. But under 400, 401 is where I think you can get somewhere between 10 and 15 points. That would be a big number for your put. Anyway, that's my take. Does anybody else have a question on anything? We just have a few minutes left. Any other symbols? Any other questions on anything? Copper. Well, I judge copper by the FCX. And again, this is reflecting the price of copper. V bottom with a nice rising channel into big resistance. As long as this holds 40, I'm good. But below 40, I'm thinking of exiting it. It's had a long run, 27.5 to almost 43. Nice move. Multiple waves too. 1, 2, 3, 4, 5 waves up. So for me, I think copper is probably due for a pullback. I think a lot of things are, or a sideways consolidation. Let's go to body vibe for BABA or PTD. I'll give you both. BABA, a little dangerous in here. It's at a gap and a pullback low. I would say under here, you probably have to leave it under 111, 111 and a half. Okay. But if it should turn around and get above 123 and a half, you might get a rally back to 133, even as high as 147. Not a bad angle. I would rather trade, by the way, who asked me that question? Body vibe. Okay. I would rather trade BABX. That's the BABA ETF, and look at the price, 25 versus 115. You can buy 5 times as many shares and have better leverage. Okay, that's my, and PDD, Pinduo Duo. Now it's called PDD Holdings. Okay, I don't like this. Anytime you see a Chinese stock that breaks down under the moving averages and then forms what I would call a bear wedge, you see it? Be really careful. This stock is vulnerable to a move lower down towards 88. Now, if it breaks out quickly in the next day or 2 or 3 and takes out 104.5 and starts to surge, you may see it move to 115, 120 again. This is betwixt and between, and it's dangerous. Careful. Now, HIMS for SP. Good company. Great chart. Right now, this is holding out better than most. Look at this chart. I told everyone when it broke out its inverse head and shoulders, and again when it broke out here, that this stock could be headed higher. Could be. Didn't know it was going to go that far. How about 5 to 75? Then a hard pullback to the April lows. Look at a rally back. And now, this is an ascending bull wedge. And I got to tell you, the measure move measures big numbers. You ready? 40 points from here. I kid you not. Now, that means 97. Now, I don't know if this can go up there, but look where the top channel top is, right about 97. So if you break out on HIMS above 67, I would buy it for 20 to 30 points. I'm not kidding. We're right near the bottom of the hour. So if you come into the techtrader.com for 2 weeks for free, no credit card, you'll see what we do every day. We're day traders, we're swing traders, and that's it for tonight.